Hi everyone, a massive warm welcome to today's Altcoin Bible. I'm following a bit of a theme here. I'm looking at ATOM, MATIC and METIS. So a bit of a layer 1 and layer 2 protocol space, and it is getting more exciting and it's heating up as we move further and further towards the merge, the Ethereum merge, of course, in mid-September. So a couple of these cryptos I wanted to focus on, and luckily they have some pretty interesting charts that we can look at. So I want to dive in straight away and have a look at my first crypto, which is METIS. So this is a very, very popular layer 2 token. It's right up there with Optimism and a few others that are gaining a lot of traction. I know it is one of the cheapest layer 2s on the market. And now if you're looking into Ethereum merge and what it actually signifies and whatnot, you can look at the things it doesn't do. And one of the things the merge doesn't do is actually scale Ethereum, at least right away as well. So layer 2s and protocols that can help scale Ethereum, meaning it can have more transaction throughput and generally really up the level that it's performing at. The layer 2s are going to perform a crucial part of what is going to happen with Ethereum going forward. So we should see a bump with a lot of these layer 2s moving into that. But right now we have seen a bit of an excitement pump into what's happening with Ethereum, because Ethereum just extended itself a lot further than Bitcoin did. And the layer 2s really followed as well. And some of the layer 1s did. But now we're starting to see a little bit of a pullback as a bit of that FOMO gets washed out and investors take some short-term profits, especially because we are still in a bear market. You have to expect that. If we're looking at METIS though, METIS, however you like to say it, just a few things I want to point out. And it is my danger zone for this week. I also have another crypto, MATIC, which performs a similar function. It's not quite a layer 2, but it does perform a similar function. That's my one to watch, but it could easily be a danger zone crypto that we're going to watch. So back to METIS, it is my danger zone. Now, why is it my danger zone? So it has broken this uptrend that we've been following quite closely. And this just looks so positive, this bowl shape. Doesn't mean the overall uptrend is over. Far from it, in my opinion. I think this is just a healthy pullback where we can reload, pack our bags and wait for it to go higher. But in the interim, it does need to cool off. And I think in the last few episodes, we did actually highlight that METIS needed to cool off. May have been a one to watch, may have been a danger zone already. But I wanted to show you in practice what that looks like. So what it's trying to do is create this cup and handle formation. So we've got this big, so this previous resistance over here was support and then resistance, a big cup that's forming. And now we're trying to form this handle, which is a pattern that can break up bullish. And generally it does break up bullish. But you do have to be careful with some of these patterns. It's quite speculative. But if we're looking at just the key horizontals and just the trend formation, if I can get that out. So we're looking at the higher low structure and the higher high structure. So we have so this low here was the low of METIS for this period of the market. So that was $14. And we had a low up here at around 19. So that is a higher low. Then we had another higher low, 26, another higher low, 32. And then we came up into these areas, and obviously it's higher than the last, but you can see the trend that it's moving up. It's adhering to this uptrend quite nicely, and it looked like it was going to continue on a bit higher before we had a pullback. Not so the case. With these higher lows as well, what we crucially were seeing in conjunction with that was the higher high. So we have the high here, we have another high that's higher than the last, then we have another high here that's higher than the last. And then crucially, we didn't have a follow through after that. So that is a bit of a tell. And also what we highlighted previously was the bullish momentum in the RSI began to tail off. So that is another good tell. If it can't breach key resistance and you're seeing a lot of these momentum indicators begin to drop off, then you can reasonably assume that we're probably going to reload a bit lower, or this trend is beginning to peter out. So that's what I'm seeing. It's also broken the 21 moving average. You can see this blue line here, short-term uptrends and little bull trends. As soon as we lose that, generally we are in a consolidation rather than an uptrend. So that's really important. So broke that, broke this uptrend line, which I've got there very clearly shown. We also broke the momentum on the RSI. So you can see as we're moving higher, the peaks get a little bit weaker. This one, topped out up here when it tried to break, but it couldn't. And then after that, it has just been a dead zone. It's been grinding along, and then it finally breached along here and it's come underneath. So for me, this is a very, very clear consolidation. We're moving back into these lower areas. Buy zones below are in play. So the buy zones that we had brought up a few weeks back, definitely in play now. And you can also use the Fibonacci retracement as well in line to give you a little bit of assistance when picking these levels. Some of them are confluent, some of them are not. So I just wanted to bring it up because in pullbacks, that if you think we're in a broader uptrend, then you can use a Fibonacci retracement, which are just mathematical levels to give you a bit of guidance on where some traders or investors will have bids stacked, where you may find it a bit sticky when the market could bounce and go higher. So there where you can have bids stacked. So I've just got here on this volume area here, and just on these previous peaks over here, I think this is going to be an area where we do find it a little bit sticky, and that's around about $36. So really not too far down from here. That would only be another 36 is down to about 6% lower. I think that's absolutely possible. Bitcoin can't break up from this section. If Ethereum can't break up from this section, and if Bitcoin and Ethereum break down, a lot of these altcoins that have had a recent burst up are going to have a bigger pullback, in my opinion. Then we have 28 down here. Look, I think this is probably about right. You can maybe move it up a bit higher to be in line with the 0.618. So around about $28 to $30. I think $30 is going to be a crucial area. I think we can duck beneath it. But as we climb lower into these areas, you see this volume profile on the right-hand side. This is where a lot of buyers are going to come back in and get very, very excited, especially down to 0.786. This would mark, this level here would mark the area when we start to get back into these lower bowl areas, or the bottoming areas of this market, when buyers will get very, very interested. There'll be a lot of buyers stacked along through here. So we could see a little bit something like this, a bit of a jump out like that to go higher. And then the target would be 66, around 66 to 70, around about the 200 daily moving average that will snake down and hit this horizontal, which over here was the extent of this almost dead cat bounce over here, this little rally that couldn't go any higher, and then we went into a capitulation phase. But if we are in a new midterm uptrend, then METIS is looking very, very exciting, and these are some levels that you can definitely focus on. But I would keep adjusting because, like I just draw the Fibonacci retracement over, some of these levels aren't quite confluent anymore as they were a few weeks ago. Make sure you're using as many indicators in conjunction with one another to give you as much data as possible moving forward. So that's METIS. It is my danger zone, but not too worried about the mid to long term, especially with that narrative. All right, cherry ripe, let's crack straight in. So this week it's Cosmos Layer 1, very popular Layer 1 protocol. Now the trend just looks tremendous here. It's moving up really, really nicely. Those higher lows, which we spoke about on METIS, very, very visible here on Atom. So low, high, low, high, low, high, low, high, low. Now the difference is what Atom hasn't done here is break down. So Atom is continuing higher, bouncing up beautifully above the 21 moving average here. You can see it's found support again, and it's trying to move higher. Those highs are very, very clear. What it does want to do here, though, is create a new higher high. Otherwise, this positive trend likely peters out up here somewhere and comes down into these buy zones, which you should be ready to catch the dip on. And they're very obvious too, because you see this huge volume area on the right-hand side. These areas will have a lot of volume come in terms of buying power if investors are waiting for that opportunity, which I think they are. This area is absolutely crucial. Now, I'll just draw a bit of a line here so you can see. So breaking this, moving through this line is absolutely critical. Why? Because similar to METIS, there was a bit of a dead cat bounce where the market tried to rally, but it was a bit of false rallies. People took profits, and then we went into capitulation. This was the ceiling of that over here. So once we clear that in Atom, you have this big gulf in volume on this right-hand side. So it's a gap. And I've just said here, a gap up is possible, because when you have a big gap in volume, the market generally gravitates towards the next level of volume. However, I don't think that is likely the case in the short term, because we are going to run into some serious horizontal resistance and moving averages above. But broadly, the trend you can see here, we do have a lot of room to move if Atom can break this short-term resistance above. Now, if it can't, these levels are certainly in play, and they are in line with the Fibonacci retracement, also volume profile on the right. The RSI is compressing. Bulls are getting weaker, yes, but you can also see that the higher lows are very visible as well, and we're trying to bounce off the bottom here again, ready for a move higher through to the upside. This may, of course, break down, and price may break down as well, but it is very clear that it's consolidating. We will get more information soon, but definitely use the Fibonacci retracement here to help guide you on your levels. And this one's a little bit clearer. You can see my price levels are very, very confluent with the Fibonacci retracement levels. If it gets down to the 0.618, be buying pretty hard here, but these levels look good. Then $17 up here is probably that next target. Once it breaks here, I think this 200 moving average, see this red line here. Now, every single one of these candles that you see on my chart, especially on the daily, represent a day's worth of price action. And the 200 moving average signifies the average average price of 200 of those candles. And you can see here, it's very, very obvious on the chart, and it is always used as a support, resistance, or the market just adheres to it. So it will be, and a lot of these altcoins as well have been under the 200 for a very long time since we were in the bull market, and haven't been able to break above it. You can see over here, when we're in the bull market, we're above it, so the red line, we're above it, bouncing above it, climbing back above, and we broke beneath it and couldn't really rescue ourselves above. And that's the same with many, many altcoins. Once we're back above it, we're in a bullish trend. $17 is definitely on the card. Break that, then we're hitting the horizontal up here at 23. Break that, then we're up to the volume profile finally at 27. I think that's more of mid to long-term goals there, but this is shaping up really, really nicely. So it is my cherry ripe. My one to watch this week is Matic. Now, why it's my one to watch? Excuse me, it's my one to watch because it's still doing okay. It's above the 21 moving average here. You can see it's just hugging this blue line really, really nicely. So there's every opportunity for this to bounce. And I do have it on my one to watch as well because it does look bearish on a few of the indicators. So it's rejected here, and I'll just show you. It's been rejected at the 200 daily moving average. In fact, it hasn't even been able to get quite close to have a test of it. It's tried to move up. It's been rejected here. It may have another go here, but I'm not confident that it can actually break it. Now, why? Because we're seeing a bearish divergence. So you see these three peaks here. So we've got one peak, a higher peak, and then a third higher peak. While what's happening on the RSI is we've got a high peak, pretty much no peak. We've just got a trough. And then this peak here in line with this run up here is lower than the previous. Well, I want to say this one's higher than the last one, but overall they're all trending downwards. You can see the trend here. They're all moving lower and lower and lower as price is climbing higher. That is a bearish divergence. It's showing you that bulls are losing strength while price is moving higher into resistance. That is not a good thing to see, especially in a bearish phase of the market. Again, it's holding the 21 and it's holding the volume profile on the right-hand side. So there is still hope as long as it maintains this structure. And you can see here, it's got a lot of higher lows. It's got the higher highs, but the underlying sort of health of this move is beginning to peter out. So I'm just a little bit concerned there. It is one to watch because it could surprise us and have that move through and could break out and invalidate the divergence. That's fine. Then the 200 would be definitely on the cards. And then after that, 1.39. And the reason that is because it's got volume profile on the right-hand side, and it was the consolidation area for this previous big amount of price action over here on the right before the capitulation. So this will provide a tremendous amount of resistance to try and crack through, and I don't think we'll do it on its first try. Probably does something like this. If it can crack through, it will hit and then come back down to test the 200 and try and grind its way out of there. But again, that's more mid to long term. Right now, I think the probabilities are that this breaks down from the 21 and comes down into these sort of areas. You can see here, if it breaks this here, which is the say 86 cents, there is a gap of volume on the right hand side here where there really are no bars except these two, and then it should drop quite significantly down to these areas quite quickly. But right here, it's going to try and hold this level here because this was the previous low here. Also, get out your Fibonacci retracements, just have a look where things might fall to give you help. But I would not be getting very interested in Matic unless these divergences begin to resolve itself and see a bit of strength come in, because right now I'm not too happy with it. But apart from that, definitely one to watch. Guys, I hope you've enjoyed this episode and the cryptos that I've covered. If you have any questions or remarks, let me know, and all feedback is welcome. So have a wonderful day. We'll catch you again for our next video. Ta, bye.